The market falls for the fifth consecutive session as Trump's tariff threats and selling by foreign investors weigh on sentiment. The Nifty ends with a 300-point cut, while the Sensex tanks over 1,000 points. Realty stocks see deep cuts. Healthcare and public banks drag as well.
Midcaps fall under pressure amidst the sell-off. The Midcap index slips 1,600 points. The Midcaps are down 20% from the 2024 record highs and 6% in just 2 trading sessions.
Forex dealers left puzzled as the rupee makes a surprising recovery even as US tariffs on steel and aluminums kick in. RBI likely to have sold dollars in massive amounts. Sources say the move is an attempt to scare speculators.
Hello and welcome to a fresh edition of Market Sell-Off. I'm Nigel and with me is Surbi. Surbi, what a trading session it was. You seem to have indicated in the morning with this red color and it was red all the way. But I'll just say one point, I don't think we should lose heart. In the last 44 years or so, every year you've seen the index, the Nifty pull back closer to 10%, barring 4 years.
Yeah.
So that gives you some heart that sometimes corrections like these just tell you, keep it going, keep your SIPs going, and ultimately, a longer span of time, things will turn around. The problem today was the broader markets, not the headline index, but there was pain in the broader markets.
Oh, absolutely. And we'll talk about this as we go over the next 20 minutes. We've got lots of perspective lined up on the show, both on technicals, on fundamentals, on the currency market, and what's happening with, of course, mid-caps as well. Just a quick word. I mean, what did we see in the market today? It was a slam dunk completely, and the pressure just kept mounting. The market opened with small cuts, and then the cuts just kept on getting deeper. The Nifty's, loss was about 300 points, 1.5%. But the crunching fall was really in mid-caps and small caps. But by the way, even on the Nifty, the Indian market again has underperformed global equity, second day running. So while the tariff headlines are big concern for markets around the world, India is falling more. Now, let me talk about this, fall that we had in mid-caps and small caps. In 2 days put together so far this week, the mid-cap index is down 5%, the small-cap index is down 5.5%, and stocks are falling across the board like 9 pins. So what's really going on? Well, I've been trying to sort of get some perspective from mutual funds, which are large players in the market. And the sense is that right now they're not seeing any kind of panic redemptions come through. In fact, flows in most fund houses, most AMCs, they've been positive so far in the month of February, and mutual funds are still net buyers in this market so far in February. So they're providing the support, but yes, there is FPI selling. The larger selling seems to be happening in the rest of the market, which could be HNIs, which could be family offices, which could be, of course, direct retail participation in stocks as well. That's where the unwinding is happening. And I got 2 reasons. Why are people selling mid-caps and small caps so much? 2 reasons, logical reasons that made sense was, one is the need to protect profits. Given the crunching fall in the market, you want to protect wherever you still have money left on the table. And that seems to be a part of the psyche that's playing out. And the second is tax loss harvesting. Remember, you can offset your losses against, gains, capital gains that you may have. And some of that technical factor could have been playing out as well. You want to book the losses to offset against future gains. So anyway, all things put together, it was a very, very weak session today once again for us, Nigel.
Well, that's right. And in fact, the rupee, that was the one that was in focus. It saw its strongest intraday in over 2 years. Dealers, they attributed the rise of the rupee to the RBI likely to have sold dollars in massive amounts. Lata joins us to decode the rally that we saw in the rupee in today's trading session. Lata?
Well, the rupee's rally is absolutely come out of the blue, and it is an extremely sharp rally. The rupee at its sharpest dealt at 86.63 and the overnight close was 87.46. So, it's almost a 1 rupee jump or a 1 percentage point rally in the rupee, and it is surprising because the dollar index has actually strengthened. Last week, Friday night, it was at 107.70 thereabouts. Monday, it went to 108.10. Tuesday, now it's at about 108.4. So dollar is strengthening. Almost all Asian currencies are weakening. Almost all. There's a minor green on the ringgit, but that's minor. Whereas the Indian rupee is extremely strong. And the only reason why it has been strong, the only person who's offering dollars like no tomorrow is the Reserve Bank of India. There are some huge numbers floating around, but all this is market chatter. People tell us that yesterday as well that the RBI must have sold well over $3 billion. Today, in the first half itself, they must have sold an equivalent amount. So the market is only trying to guess why is the RBI standing so much against the current of the foreign exchange flow. And it's not only peculiar to India. You know, all EM currencies are falling. One guess is it wants the other side to come in and sell, the exporters. Typically, Jan, Feb, March is an export-heavy month. We do very well in exports. We sometimes have a current account surplus. So he's probably tempting the exporters to come and sell. Alternatively, they are scaring the speculators. You know, one day the rupee went from 86.50 thereabouts to 87.40. The next day it opened at 87.95, almost 88. I mean, this kind of speculative moves have to be stopped and the speculators have to be hurt. And that may be the position that the Reserve Bank is taking. But at the moment, all these are guesses.
Okay, Lata, got it. So maybe a bit of a reminder that, hey, we're also in the market and we can act when we wish to or choose to. Let's also hear out what the Chief Economic Advisor, Anantha Nageswaran, had to say on the Indian currency's weakness.
In the long run, which is 5 years or beyond, it is ultimately boils down to inflation differential. So in that sense, as long as our inflation rate is 1% or 2% above the average inflation rates of developed countries or the US, to that extent the currency will depreciate. But the point is, this currency depreciation hasn't prevented India from delivering returns to investors. If we are going to settle down at an inflation rate of around 3 to 4% rather than 5 to 6% as before, and if developed countries also end up finding that they can't bring it below 3% down, then naturally the gap between the two really shrinks a lot. And therefore, India may be able to experience a much lower rupee depreciation rate than what we have seen historically. And I don't think we should be too concerned about what is happening currently. This is an extraordinary period of dollar strength, which has lasted quite long.
Okay, all right. Well, let's get to the markets then, and let's welcome our guest. We have Jay Bala of CashTheKiosk.com, who will help us out with the technicals, and Sudip Bandyopadhyay of Inditrade Capital, who will help us with the fundamentals. Hi, gentlemen. Thanks a lot for joining in. Jay, you go first. We saw that counter trend bounce from 22,800 all the way to 23,800. Now we're closer to around 23,000. I think the call you were making earlier was for sub 22,000 levels. Is that on?
That's right, Nigel. See, the markets could see a very short-term bounce to about 23,300, 23,400, and then head on to break the recent low registered about 22,700 and change. The higher time frame objective has been the same since end of September, early October. That is the closing levels of June 4th June 4th and the intraday low, which is around 21,800 to 21,200. So the short-term resistance for the Nifty is 23,300 to 23,400, and the supports come in at about 22,700. If that were to given, the next support comes at about 22,100, and after that, it's directly to the June 4th low.
Okay, all right, got that. We'll come back to you, Jay, for some more questions. But let's just go back and look at the broader market weakness that we've seen. Like I said, about a 5.5% correction at the index level in just 2 days, and a far deeper correction when you're coming down to individual stocks. We've got Sudarshan joining in. He's been looking at a lot of trends, including the FBI selling that has gripped this market. Sudarshan, tell us more.
So in the last few days, market has taken a big knock, especially in the broader markets, with both mid-cap and small-cap indices are now down 20% each from record highs that both these indices had hit in late 2024, and down 6% each just in last 2 days. And one of the reasons, if you can attribute, is big FIs selling. Just in 2025, FIs have sold shares worth nearly rupees 1 lakh crore in the cash market and nearly rupees 3 lakh crore if you see from the month of October 2024. And the impact can be seen in broader markets. Nearly 30% of total mid and small cap stocks are at or near to 52-week lows, with 70% of them are down 30% or more from their recent peaks. For Sensex and Nifty, the fall is 11 to 12% from the record high, both these indices that have hit in September 2024. But look at broader markets. Mid-cap and small-cap indices are almost in correction territory. Mid-cap index is down 17%, small-cap index has fallen 19% from record highs. Nifty Next 50, or earlier it used to be known as Nifty Junior, has fallen 22%, and Nifty Small-Cap 250 is down 90%. The fall looks more severe if you look at sectoral indices. Media index is down 32%, energy 30%, PSU 28%, Realty 26%, and PSU Bank 26%, and metal index is down 20% from their record high. So which of the stocks are top loser? Well, not even a single stock is at a 52-week high. And amongst top losers, PSUs are at top of the table. Top losers are MRPL, Cochin Shipyard, Vodafone Idea, Hind Zinc, Oil India, and HUDCO, down somewhere in the range of 46 to 60%. And among small caps, top losers are Sterling and Wilson, Chennai Petro, Raymond, Jupiter Wagon, Titagar Rail, and ITI, down somewhere in the range of 60 to 65%. And if there was any expectation from earnings, that too seems to have vanished, with number of companies missing estimates has been much more than the ones beating expectation. We'll have to see how the remaining calendar earnings pans out, and if any time soon FIs start buying. That's a big if, but that's what we can hope for now.
Okay, nothing wrong in hoping, but hope is not a data point. Thanks a lot for that, Sudarshan. Well, Sudip, give us a couple of, good buy calls, because I'll tell you what, I was looking at the pattern, 2011, 2016, we did see the index pull back a little bit, to around these levels. So maybe if you follow that sort of a pattern, then maybe at most the index will pull back another 4 to 5% from here on. There just maybe, I know the rally has been very, very ferocious, but you to give us a couple of ideas, what would they be?
Well, Nigel, I think, from a long-term investor's point of view, this can be a good opportunity for accumulating good quality stocks for 1 year plus kind of time horizon. And, I've been telling them to focus on the large cap universe because the valuation does look reasonable in some pockets. Look at BFSI. I think, this bucket definitely should be on an investor's radar. And, if you want to really play safe, go for SBI. It's a great bank. A lot of good things are happening. Interest rates are started coming down. So the way forward for SBI looks good. So buy SBI if you have to buy in the BFSI space. If you're looking at a slightly larger basket of BFSI stocks, which includes insurance, go for LIC. I think fundamentally, structurally, way forward for LIC looks very good. So buy LIC, forget the Q3 numbers, forget the Q2 numbers and this all the other parameters at this stage. Fundamentally, structurally, the way the business is poised, the way regulations are shaping up, I think LIC looks very good. Cement is another pocket where, Nigel, I'm very bullish. And, again, play safe, go for Ultratech. 170 million capacity already in the back, gunning for 200 million, looking at acquisition. Costs very, very, carefully being looked at and being controlled. So in spite of the, pressure on volume, the performance has been good. Margins have improved. So Ultratech on the cement pack definitely looks good. And finally, I think my favorite, Reliance, I'm looking at a 1500 kind of a price, lot of triggers, value unlocking opportunities, and this correction definitely offers an opportunity. So these 4 stocks definitely should be looked at by investors building portfolio.
Can you name them once again? There's Reliance, Ultratech,
State Bank of India, and
SBI. And LIC, got it. Okay, so 4 pillars to build your portfolio on without getting too scared in this market fall. Got that, Sudip? Let me try and ask you the same question. Jay, of course, you've been very cautious on technicals. And again, this question doesn't apply to someone who's looking at a quick trade over the next 2-3 weeks. But is there anything in the market where the chart structure is still okay, not broken, which is showing relative strength in such a downbeat market, where perhaps from a portfolio perspective, one can look at buys?
See, one sector that's still not broken down is IT, and as long as IT index trades about 39,900, it's still positive. But my understanding of the technicals of the US markets, the tech sector in particular, that's very close to a significant top. So IT is the one sector where you can try to find hiding spots, but I'm not too confident because the leader TCS is very close to breaking down the January low, but the rest of the stocks are okay. And we discussed SRF last week. I tried to go deeper into the specialty chemical sector and see if the rest of the sector is doing something interesting, but no. It seems to be very specific to SRF, and SRF has broken out from a 5-year consolidation. So I would see what the stock does about 2,500 to 2,400. that will be an interesting entry point if this breakout is right to sustain, and probably the rest of the sector were to join. So these are the two I'm looking at from a portfolio perspective, but not too aggressively, very, very conservatively.
Got it, Jay. Just very quickly, Sudip, you've given us 4 large cap picks. Is there any mid cap stock you want to add? Make it a 5 ka punch.
Yeah, I think, if I have to add one mid-cap stocks, I think Samvardhana Motherson is one stock. A lot of chatter around the tariff and how they will be hit and things like that. But I think with this correction which has happened, I think it's definitely worth buying. Anyway, auto ancillary is one space where I'm definitely positive, and I believe this company has a good future.
Okay. All right, gentlemen, thank you very much for joining in and giving us the perspective and advice on what has been a really difficult market. Thank you very much for being with us today. With that, we have to slip into a very quick break. As we do so, hear out some more commentary and market opinion. We also caught up with Rohit Srivastava of India Charts and also Adrian Moat to get a foreign perspective on the big sell-off that's underway in the Indian market. Back in just a bit.
I would expect that markets try to bounce back, loosen up the negative sentiment much more before you get another meaningful sell-off. However, the hard part would be to say the same thing about mid caps relative to large caps. I think that is where the next debate shifts then. But these are the Nifty levels with which we'll be working, and still looking for that it does not significantly sell off yet. You might attempt another recovery into March. There may be further weakness in mid and small caps. After each bounce, they may still keep selling harder as we are seeing today. But somewhere the large caps may find support because money in the end has to go somewhere. A lot of money is flowing into funds. They will only reallocate. They will decide, okay, let's not buy too much of mid cap. Let's buy this. They're hybrid funds that will shift back and forth. And so at some level, you end up getting buying coming back to the large caps.
So there doesn't really seem to be any sort of technical level for the market at this point in time. And if you go back to your earlier point, which is the valuation of the market, this remains a very expensive market, which is justifiable if it is generating high growth. So this is going on against a backdrop of India being a big outperformer, emerging market funds having a good exposure to India, at a time where we've got rising U.S. interest rates, which put pressure on current account deficit countries, including India. And we've also, surprising, considering you'd think it would be the center of the trade dispute with the United States, Chinese equities doing quite well at the moment.
Welcome back to Market Sell-Off. Venture capitalists and PE fund managers, they have remained bullish on India. Manish Kejriwal of Kedara Capital anticipates the second half of 2025 to be a buyer's market, while Mukesh Mehta, the senior managing director at Blackstone, says that India has been their second best performing market over the past 5 years. They said this at the sidelines of the IVCA Conclave 2025. Let's listen to them.
Sharon, I think if you look at what was clear is the time gone by. So I look at 24, it was definitely a seller's market. We had IPO markets which were crazy. We all got exits. I think each one of us, we had more than 4 IPOs. We still have another 3 in the... It's gotten tighter now. So when it's a seller's market, buying was very difficult last year. The public markets eventually are an indicator where the private markets are going to go. And it hasn't been the most healthy start to a year. I think prices rightly will correct. The multiples will compress. And the second half of 25 will be a buyer's market much more than a seller's market.
India is now the best performing geography for Blackstone globally for the last 5 years in a row. It's the 3rd largest geography for Blackstone globally after US and UK. That determines the importance of India. And as we speak, March 20th is when we complete 20 years. Our founder, Steve, will be in India to have that celebration. So we are very, very bullish on India. And, you know, in this business, success breeds success. So more you deliver returns, more investors give you money to deliver more.
All right, well, there you heard it. Lots of perspective on the Indian market. Brutal fall today. Let's see, tomorrow, middle of the week, maybe we, you know, get some good vibes coming through overnight.
Well, that's right. That's the hope. And hope is not a data point, but nothing long.
But we live on it.
Hoping. Well, on that note, we'll wrap up on the show. You stay with us. More news and updates coming up on the other side.